has started. So why don't we go and get started? It's 10 o'clock, and good morning to all of the attendees. Welcome to the QuickBooks webinars. This is October 13th. So this is part 2 of the QuickBooks online version. And by now you would have received a copy of the PowerPoint presentation that was forwarded this morning, and it was sent so that you can take notes. I'm Steve Schillig, the moderator, the director of the Small Business Development Center, headquartered at Kent State University, Tusk. Part of the Small Business Development Center, we provide confidential, no-charge consulting in areas such as marketing, finance and accounting, computer technology, HR, and especially QuickBooks, which is what we're talking about today. Those resources are available to you on a confidential, no-cost basis. We have muted everybody for the speaker's benefits, but we do encourage questions or comments as we go through this, so please use the chat room. You can find the chat room in the ribbon below your screen, or sometimes I'm told it's up in the upper right-hand corner. Just hover your mouse, it will read show conversation. Go ahead and type your question in there, and we'll do our best to get that answered. Ann has been very kind to want to move on to another section until she's certain that there's no confusion or question. So we'll do our best to keep everybody up to date and current on any information that she provides. We're pleased to have on the call today Ann Sharp. She's the founder of Excellent Admin. She finished both her bachelor's and master's degree with Walsh University, worked in the accounting field for over 10 years, been teaching QuickBooks for 4 years, and especially a small business, and most importantly, she's an SBDC advisor, so her direct assistance and is available to you for your assistance as you have questions with QuickBooks or need additional support. This session is being recorded, and it will eventually be found on our website. Give us a few days to a week till we do that. If you have any other suggestions for programs that would be helpful to you or your organization, please put that in the chat room, and I'll make note of it, and we'll do our best to accomplish those requests. At this time, I'd like to turn it over to Ann.
Hi guys, good morning. I do want to go over a couple things. Obviously last week we covered, signing up for QuickBooks Online, which most of you guys already have, adding users and the security settings. Everything we're going to do today is going to be as an accountant user for me, but it's the same view as the master admin. A couple things just switch with, like, I can move between accounts where you guys only have one account. But we will still be able to use that. So you're going to see what the super admin has the ability to do. And then we're going to be working with our chart of accounts today. So we learned how to add stuff and edit them. And so we're going to work with using those charts of accounts. And then obviously, now that we're going to start to put data in here, you're going to be able to see some of the reports and then how it affects with the dashboard. So everything we covered last week, we're going to dip into today in different pieces as we're kind of moving throughout today. Today, we're going to talk about linking our bank accounts, both electronically and how we can enter stuff manually. This is important if you have more than one debit card or more than one credit card for an account that gives you one statement, because it usually only syncs half of the transactions. So you do have to learn how to manually enter some stuff to make sure you're not missing anything. Also, with QuickBooks Online, sometimes recurring fees like bank charges that are the same amount each month tend to be ignored after 5 or 6 months every once in a while, because it thinks it's a duplicate because it bills on the same day for the same amount through the same account. And so QuickBooks Online, as it gets a little bit smarter, sometimes that will happen. It's not very often. They've worked really hard to fix that, but there are still areas where something will be missing every once in a while, and you will need to know how to manually enter it. We're going to talk about linking credit cards today. Again, how do you enter a manual transaction when something is missing? Then we're going to talk about categories, which is what we're going to talk about first, which play into our chart of accounts. So we're going to get into a little bit more high level. I do keep that area basic. I do probably like 12 accounts total, focuses more on small business. I know not everybody on here is totally small, but it gives you the area where you can branch out and split accounts. And I'll talk about those as we're going through them. We're going to talk about creating and editing a vendor, which is somebody that you're buying supplies from, whether it's, you go to Marathon, the gas station, or you're going to the craft store because you need craft stuff for activities you have. And then we're going to talk about matching transactions. So I'm going to work 90% in one account, and then I'm going to flip to another account for matching purposes, just to show you what it looks like when something matches. And then we'll kind of talk about how you get QuickBooks to realize that something is matching, so that you don't have duplicate data. People's biggest fear with QuickBooks Online is the duplicate data, because you're creating invoices, you're marking them paid, and then you're making deposits, and then they want to make sure that they all match through properly. And so that's going to be where the matching kind of comes into play. So let me go ahead and start to share my screen here. So you guys should be able to see the QuickBooks Online portal here. Okay. So the first thing we're going to talk about is, let's talk about some of these categories. So when we talk about chart of accounts are the classifications that you want to see on your profit and loss. And so it's really important that your profit and loss matches what your accountant would want to see, what the IRS standards are, but also what you want to see as a business owner. Yeah.
This is Steve. We have one attendee that can't see it. Maybe the others can tell us if they see it or not. Maybe it's just an individual situation. Do the others see it?
My screen?
Yes.
It's probably because I flipped here. There. I see the red bar now. Okay. So when I go through some of these are the high level ones, and we'll talk about some of the subcategories that you can have with the IRS categories. So a big thing is rent or mortgage payments. So if you have a commercial property that you rent to house an office in it, you're going to have a rent expense. And that could be as little as $1 all the way up to thousands of dollars, okay, pending your space. If you have a home office, then you're going to have the ability to write off a percentage of your mortgage payment as a rent expense for the business based on the square footage of your house and the square footage of the room that you would be using. And so you want to track that. Now, I know that some people are like, well, I house all my inventory at my house and it takes up so much of my house and yada, yada, yada. You still live there, so you still have to be a little bit more conservative with this number. But you can take a 10 by 10 bedroom and call that a home office and go from there. I've had people that use more like 50% of their home for their business because of they let staff come over, or they have, a storage shed, or they house, work vehicles, those types of things. So you do have some availability there. You're not going to track your mortgage payments in QuickBooks except for probably once a quarter. And the reason for that is you need to know what your percentage is that is used for business and do the manual math, because that goes in as a home office deduction on the tax return, which is a different line item. It's down at the bottom of your Schedule C, which is the form that shows all your income and expenses. So you're going to supply that information from a mortgage payment perspective to the CPA. The CPA is going to put it in. It's not necessarily going to be on the profit and loss. But if you pay commercial rent, that's going to be on the profit and loss, because that's 100% of business expense. That's not going to be split up by a percentage. Okay. Utilities is the same way. If you rent an office that's a commercial building or for commercial use, okay, you're going to have utilities, internet. You might have to heat it. You might have to run electric to it, or it might be included in your rent expense. Those things are up to you. But at minimum, most of us have internet. That's the number one thing we run our businesses on, especially with all being virtual. So with that being said, then your utility expenses, if you're doing it in a commercial space, is 100% deductible. If you're doing them at home, you still get to deduct a percentage. It's going to be the same percentage as your mortgage payment. So it's a flat percentage. So for me, I would say I have about 15% of my home that will be my home office space. And so 15% of my cable bill here and my gas bill and my, sewer bill and all those bills that we have here is going to be deductible through the business. Now, I can pay them 100% through the business and then back them back out, or I can pay them personally, which is how I do it, and then again supply my accountant with that information later. For me, it keeps it cleaner when I pay it personally because more of it's personal use. I'd rather reimburse myself from the business if I need to show the percentage. But again, that's going to be a preference done internally with you guys. Telephone is always separate. So I know it's a utility. We consider it as a utility. They do want to see it separate. It is a separate line item on the tax return. And so you always want to factor that separate. Cell phones are super easy. I have 4 lines, 3 of which are used for business, but I do write off the 4th line because my accountant is like, they're not ever going to dig through this to determine how much of this is business and how much isn't. And the 4th line is my father-in-law, and my father-in-law actually comes during tax season and works with me and one of the accountants I work with. So realistically, it's his payment for doing the work with us, so it can be stretched. But I tell people, like, if more of it is used for business, deduct it through the business, pay it through the business. If more of it is used for personal, then you might want to split it. But what your accountant is going to allow you to deduct. I'm a firm believer, I'd rather you ask me and I tell you no than to have never asked at all. And the reason for that is because if you don't ask me, we could miss an expense that you really legitimately can take. And if you ask me and it's a gray area or not an actual expense we can take, at least you ask. And so you have a solid answer moving forward, especially as you're learning what to categorize. You have furniture, equipment, and machinery. So, desks, chairs, equipment for me is computers. It can be trucks, trailers, those types of things. And then machinery is pretty obvious. If you have high-end machinery, your 3D printers, your presses, those types of things that get you a lot of that. Self-explanatory. If it's over a certain amount, I tell people if it's over $1,000, it's something we need to look at the end of the year to determine if the business can take the expense now or if it needs to be depreciated based on the life of the asset. But if you do $1,000 expenses all day, then maybe your threshold is $2,000 or $3,000. Most small businesses, it's $1,000, and we look at it. So it's something that if we depreciate it over time, it isn't on the profit and loss. It should be on the balance sheet. So, we have to pay attention to that. It should be under fixed assets and then obviously have the expense there. So that's a determination again at the end of the year. If you put it all on the profit and loss and then your accountant is like, hey, you can't take all of this, your data is a little bit skewed because you're going to look more profitable than you think you're going to look. But in reality, if you paid cash for it, the cash is gone. So it's kind of a juggling act with those ones, and really going to determine what your expectations are. And then if your business can take it. Vehicles, those types of things, they still need to show on the balance sheet, whether you depreciate them or take them in full. And the reason for that is obviously if you were to sell your business, you'd be selling your assets, and those would be assets. Okay. We have office supplies. So office supplies is everything: pens, paper, ink, business cards, which can also be under advertising and promotions. People forget this. They're like, oh, I print stuff at home all the time just because it's easier. Well, do you ever buy your home printer and some ink? Because that's definitely a business expense. Or people are like, well, I just buy paper and I kind of just split it up everywhere. Well, then make sure the business buys the paper. You're going to use it, but make sure that it gets divvied out properly. You don't want to pay a bunch of taxes if you don't have to when you've actually spent the money on legitimate expenses. Okay. Our home office, this is kind of what we talked about, the square footage of your home. You need to know the total square footage versus the percentage that's getting used. And then obviously your utility cost. Now in this, you also get some of your property tax can be worked in there as well. And any repair and maintenance if you've done something to the specific area that you're working in. So if you had to, redo the duct work in that area, you might have something to do with that. Or if you needed a new window, or if the door wasn't big enough to handle your supplies, stuff like that, you can get that broken down as well. Not everything that you do to your house counts, but there are some that do count. Now we're going to talk about advertising and marketing. So advertising and marketing has a couple moving pieces across the whole area. So it's your website. That technically can be a dues and subscriptions as well, but you're using it to advertise your business. So I put it under advertising and marketing. Facebook ads, any ads that you're running anywhere. This can be in newspapers. This can be in penny savers, which are like the little ads that float around that I always find on tables, okay? This can be when you print flyers. If you go to UPS to use their printer to print flyers and you hang them up, that's gonna be advertising and marketing. Business cards, stationery. I have envelopes that have my stuff, my return address on them, so I don't have to write it all out. All of that's gonna be advertising and marketing. You also do an event to do a trade show. That expense is gonna be advertising and marketing. If you are doing if you're doing food while you're there, or you take a client out because you're trying to wine and dine them because you're working an event, technically that it can go under advertising and marketing. I keep it under meals and entertainment to keep it clean. But if you're using it at an event like that, there is just cause to have a subcategory under advertising and marketing that might be meals. It might be travel. You give yourself some areas to track it a little bit better. I see this a lot when somebody's going to a big event, like a TNC, which is a traffic and conversion event. That event costs $5,000 to get into, and it's in California. So you have to get from here to California. So that's an expense to get to the event, plus whatever the after hours and all the things that you're doing at the event to market, to build your brand. Those are going to be in here. So you might have some subcategories under advertising and marketing. Dues and subscriptions. So this is going to be like Microsoft Office that you pay once a year or every month, okay? This is going to be any chambers that you're members of. This is going to be any technology that you use to run your business almost. If you use Calendly to do scheduling, if you use Teams, which is built into Microsoft, that's going to be something. You're paying GoDaddy for certain things. Those are going to be dues and subscriptions. WordPress, like I said, can be put in here. I would put it in advertising and marketing personally. That's just for me to keep track of it. But I pay for QuickBooks. That's a dues and subscriptions. You guys are paying for QuickBooks Online. That's a dues and subscriptions. So you have some areas there, but anything that you pay, whether it's monthly or annually, that is to be part of something is a dues and subscriptions. Then you have meals. So we talked about meals a little bit with advertising and marketing, okay? So you have two buckets of meals. You went, had food, and talked business or had a business meeting, and that's food, okay? So you're going to deduct 50% of that total number. Put the total number in the profit and loss because you spent the cash. For the year, we only get to take 50% of that on the tax return, okay? Then you have where you could take 100% of it if you took an employee to lunch to discuss their raise, okay? If you took them to discuss a raise, now you treated an employee out, which means now it's 100% deductible because it wasn't just about us as the owner, okay? So you made categories under the meals tab here. But it's really important that you don't go crazy in this area. They say that it has to be a reasonable amount of money spent on meals and entertainment, okay? Reasonable. I tell people no more than $25 a day. If you average it out, which is usually no more than about $8,000 to $10,000 a year, which is a huge deduction, by the way. But I do know some that are like, well, I didn't eat out all week, and then I go and I spend $100 at this dinner to treat clients as appreciation, right? It's going to average out. So don't be like, oh, I spent more than $25. I can't deduct that. It's an average. We just consider that reasonable based on what food it costs when you go out to eat, okay? They also do that to make sure that you're not buying $1,000 bottles of wine or bottles of liquor, because technically you don't get to deduct all this alcohol consumption we do. But if you have a glass of wine, we have travel expense. So travel, again, is another one that's, can be kind of loosey-goosey. So technically, if you go on a trip and you're working, even if it's just a day of your trip, part of that trip now is deductible as travel. As small business owners, you know that we get to travel all the time and we work all the time. It doesn't make a difference whether we're on vacation or not. So just pay attention to the travel expense. If you're staying in a hotel room while you're trying to work with a client because something happened, if you have to book a flight to get to a client or to to do something on site, that's travel expense. You also have meals that can go in here as well, like we talked about. If you have travel meals, depending on what you're trying to do with that. Okay. Then we have payroll. So payroll, this is where it gets a little confusing. As a sole proprietor with no employees, not opting to file as anything but a Schedule C, which is the form on the sole proprietor tax return, you don't take a payroll. You take what are called owner's draws. They are not deductible from the business. It basically means you draw from the business what the business is profitable. Okay. That means you can take cash whenever you want, but your business might still be profitable at the end of the year and you might not have any cash in the bank because you took the cash. Okay. Profit doesn't always mean cash. So if you take an owner's draw, it goes on the balance sheet, it takes the money out of the bank account and you don't deduct it on the profit and loss. If you have employees, so somebody that works for you, that's a payroll expense. So they can be a subcontractor where you'd be issuing them a 1099 and you pay them a flat fee. And as long as they make more than $600, you're submitting something to them at the end of the year for taxes that they then need to file. Or it can be that you're physically paying a secretary on payroll and you're going to have a payroll expense, which will have their wages and taxes. And then obviously what you as the employer pay in taxes on top of it, which is you matching the Social Security and Medicare, federal unemployment, and then the state unemployment. Okay. Then you'll have whatever processing fee you have. So if you use QuickBooks Online for payroll, it's like $85 a month to do their premium. So you're going to have a charge there as processing or professional fee. And then obviously we have, I use a processor, Paychecks. They do my payroll. So I pay Paychecks to do it. And so I have a processing fee still. So those are your payroll expenses. You have automobile expenses. So auto is two areas. You can deduct the mileage, which keep a mileage log. It's really important. Accountants require it because we've had a lot of mile audits, especially if you drive a lot. So when I was driving, I used to drive about 562 miles a week. I kept a mileage logbook because when you do that times 52 weeks, it's a lot of mileage. And so they were like, wow, your business is super profitable until we put your mileage in. And then we've got a funky, lunky looking thing. And so they want to make sure I'm not trying to cheat the system. So they audited my mileage and I had to supply a book that said, this is where I went and this is how long it took me. Okay. Since then, I've decided to use what's called Miles IQ. It's $99 a year. I log our 2 vehicles in it. And every time my car moves, when I'm done and I put my car back in park, it says, was this a work trip or a personal trip? And I click a box and I'm done. And then I tell it what vehicle I drove. So it's really simple to do. At the end of the year, I print off it's half a sheet. It's got all the information that I need for the $99 I spent, which would go into dues and subscriptions. I have a clean, easy report. I do still get mileage logs books. They sell them at Office Max. They look like a little calendar, like girls keep in their purse. And you can track it, starting odometer, ending odometer, total number that was done, date that you did it. And I have people that do them by month and they total the month, and then they give me a monthly total. You just have to have proof of the mileage. You don't want to just throw a stick at it and then overestimate or underestimate because it could come back to haunt you later. Or you can deduct on the other side, repair and maintenance, gas, and the payment. So you can't deduct both. So you have to pick one way or the other. And then obviously the vehicle is going to depreciate over the life of the vehicle, okay? Or until you dispose of the asset, which means get rid of it. I recommend keeping it separate. You want to see auto insurance versus the fuel you're spending, and then obviously repair and maintenance on it. And then if you have a monthly payment as well, you're going to want to track those underneath auto expense to be separate, because you might have a meals and or you might have a repair and maintenance for general things that you have to fix. The computer crashed and it had to go to the IT guys. That could be repair and maintenance, but that's not vehicle repair and maintenance. That's just normal. So you're going to have some of the accounts that you need to specify where they go so that you don't have duplicates. So those are the big ones that I would break down there. And then the last couple ones is insurance. This is really important. You're going to have business insurance. As a self-employed person, you have health insurance, which you want to make sure you track all your medical expenses. They are deductible. You get it under the self-employed health insurance instead of just on the business tax return. You get it on your personal. So you want to pay attention to that. And then obviously auto insurance. If you don't have business insurance, you want to pay attention to that because it's really important to get it. It's not super expensive. I pay $92 a month for mine as a business, and I'm high risk industry working with people's financials and monies and bank account. So pending your industry, it can be substantially cheaper, but it protects your personal assets. If somebody were to sue the company or sue you, you've got insurance for a reason, or it protects you from, all this cyber stuff, people hack identities and craziness. So it's worth every penny that you spend on it. And then we also have legal and professionals. So if you pay your CPA, that's a professional fee. If you pay an attorney, that's a legal professional fee. They kind of loop them together when it comes to QuickBooks, and you'll see that in some of the accounts we're going to use. So you really want to pay attention to that because it's really important to track that a little bit separate. If you pay an IT firm, that could still be a professional fee if you put it that way. Anybody you're paying for services, this could be continuing education or coaching. The list goes on and on. So you want to kind of pay attention to those. But these are the main areas that most of your expenses can be built off of. Cost of goods sold is the only other thing not on here. And this is what it costs to do your business. And so it's very vague and it varies in every industry. So for me, what it costs to do my business is to own QuickBooks and to do my bill and pay system, which is how I take all my payments from clients. And then I partner with a payroll service that I outsource payroll through our company for. And that's going to be the third thing that I pay for that gives me my business the full ability to run. So my cost of goods sold is very, very small, where if you're selling specific items, your cost of good might be rather large and maybe can be a lot more specific. If you do a lot of event plannings, those types of things, that's going to be your cost of goods sold, the cost of setting up the events and getting the events going. If you're in the food industry, bakeries, that type of thing, then your cost of goods sold is the flour, the sugar, the milk, the eggs, the things you need to do that. You don't necessarily have to list it all out, but you can list food cost versus bar cost versus supplies cost, those types of things. And again, it's what you want to look at as a business owner or what your coaches, if you guys are working with any coaches, want to see. And then a lot of controversy in this area is people want to put the wages in cost of goods sold, because if you didn't pay people or pay yourself, then your business couldn't run either. So it is a cost of good. I don't put it up there because it's hard for me to separate who's doing what to determine project costing effectively or efficiently anyways. So I've just put it up, at the bottom. The number's the same. The bottom number comes out the same, but a lot of coaches encourage you guys to put them up at the top, which is totally okay. It's just making sure that it's what you want to see when you go to use it for your debt to equity ratios and your formulas that you might be doing to do planning. And obviously what you do one year, you want to do the next year so that when you compare it on your financial statements, you're looking at apples to apples. Okay, so those are our categories. Do we have any questions about our categories right now?
None.
Okay, perfect. So let me change our screen here back to our dashboard. Let's see here. There it is. Okay. So then you guys should be able to see the QuickBooks online dashboard now. So we're going to be working in one of my smaller clients, super efficient, super good at what she does. And we're going to go through like 3 or 4 things. So I'm going to go kind of slow because I want to make sure that we're doing this properly. So if you go into banking, and I just click on it and it takes me right here to which is my banking dashboard. Okay. So these are the 3 accounts that she's already got synced up. Now, this credit card and this credit card here are on the same statement. So this shows a 0 balance where this one actually has transactions. And if you end up syncing the users of the credit card statement each individually into QuickBooks Online, you can't reconcile the credit card to match the statement because the charges on one card are going to show in one stream and the charges on the other card are going to show in a different one. And so now your credit card statements split up. And so I don't encourage this. I've left this way because we haven't done anything with this since 2019. We just leave it zeroed, and I make sure that anything that's missing on this one gets entered in. So we're going to start with linking a new account. So I'm going to go here and click link account. And I'm going to link my account for training purposes, obviously. So I type in my banking username and password, and then it's going to talk to Huntington. And it's going to verify my identity here. So this gives me the list of the accounts that I have inside of my QuickBooks or inside of my Huntington bank account. So for training purposes, I'm going to go ahead and link this one. And then it gives me the ability to sync it to an account that's already here. This account is not on here because it's new. So I'm going to change this to, and I'm going to name it training because that's what we're doing. And I'm still going to follow my own habit of putting the last 4 of the account numbers in, okay? And I'm going to hit save and close on that. So now it's got this one with a check mark to sync it, okay? And then it tells me that I can sync it back through 7/13 of 2020. I'm going to sync it back just a month. We don't need that much, but you can also custom the dates. And so I'm going to tell it when to sync it back to. Some banks will give you all the way back to January of this year, which makes your life a lot easier if you're just coming to QuickBooks Online and you haven't had any transactions imported yet, okay? So then I'm going to hit connect. And he's going to do his this is the loading icon while they're getting everything. And then he wants another verification. And this is normal. A lot of banks have double security. And then now it's telling me that it's going to bring in my transactions. And then depending on how much data you're importing at once, it can take a long time. It can take a little bit of time. It's not anything crazy. So now I have 44 transactions in here that have the yellow guy. That means they're not categorized. So they're listed right here. Okay. So these, that's how you integrate the one bank account. This is, you know, all the transactions that are coming through. Now, I can edit this to edit my sign-in information. So if I have a lot of clients that, for security reasons, change their password probably twice a year. If you change your password twice a year, you need to make sure you update your information in here or it will disconnect and you won't be syncing the data. It takes QuickBooks, I would say, like 12 hours from the time you swipe a debit card for it to come in through here. So it's not absolutely instantaneous, but it is relatively quickly. So the bank balance is going to be, you know, working very well. And then whatever the QuickBooks balance is versus the bank balance, it should match or be very close. If it's off a couple $100, don't panic. You usually find it in your reconciliation. But that's how you know that you're going to reconcile pretty much perfectly, is because those numbers are going to match. Okay. So then let's go in and we're going to do this again, and we're going to do it for credit card. So we're going to link another one. And I'm trying to think what would be the best one for this. Let's see here. We're going to go back into Huntington. And it may not ask me for all the security things again. Nope, it's still going to ask me. Sometimes it doesn't if you just did it with the same bank and you're trying to log in the same way. Huntington's got some of the best security features. You usually have to tell it from the inside of Huntington you want it to integrate before it will integrate, which I obviously did that beforehand. So, and then here's my Huntington Voice credit card. So this isn't on here either. So we're going to set this up as well. And this is a credit card. And then we're going to take that one back to 731 and see if it asks us for another code.
Hey, and will it allow you to classify the transactions when you import once you do it for the first time, or do you have to do it each time you import?
It will allow you to classify them once you already do the import. So it'll stay connected as long as the password doesn't change. And then we'll go through like putting them into the buckets that they go in based on what it is, and then how to create rules so that it'll do it for you. Okay, so now here's my voice card, and it has 9 transactions in it. Okay, so that's how you do the import with linking the accounts. So the accounts are linked now, they'll stay linked. If you notice he has like a red, see if I got one, like a red exclamation point where the numbers are, if you click update, it will update all the information for us. Then it creates this little spinny guy while it's checking everything. And then these little exclamation points means that there's security steps that Huntington's blocking it. So I'd have to go in and type a code in, or it's disconnected for some reason, and you would have to get in here and update the information now. Okay. So it will tell you when it's not syncing the data for you, which is the best part. The determination is you need to determine when it quits syncing your data so that you know. So now let's go in and do a manual import. So we learned how to sync it. Now let's go up here to, well, let me open another window here. Can you guys see this second window?
Yes.
Okay. I'm going to do Huntington again here. Let's get logged in here. And then I'm going to click into the account, and I'm going to go to download transactions. So we're looking at a different portal again this time. And the Huntington gives me a box that tells me how long I want to download it. So I'm going to take this all the way back to January, since it couldn't do that from the integration. And we're going to take it through the end of September, because we already imported October 1st and after. And then it tells me what type of file to download. So it's not a spreadsheet, it's not Quicken, it's going to be QuickBooks here, the Web Connect download. And then when you click download, he pops up right here, okay? Then you click back into QuickBooks and you go to the gear icon and it says import data. And then these are all the imports we can import, which we talked about these before. So we're going to do bank data. And then I'm going to browse my PC here. And I default to downloads, which is where that is. And then obviously I always check it. This is Huntington, which is what I was downloading on today's date at about the time we are right now. And click open. And then there's a next button here on the bottom right. Click the next bottom. Now I've not manually downloaded something into here before, so I still have to tell it where to go. I can still tell it to go to the same account that we have synced. So don't worry that you can't do that, because you can. And I'm going to click next. And then because I'm importing a bunch of data, it took it a minute to do that. And then the next step is to accept your transaction. So let's go. So then we're going to go back over here to banking. And now if I click back over to here, there are way more transactions. Now I have 790 transactions instead of just 44, okay? So if you're somebody that goes to the same things over and over again, like we are, most of us are creatures of habit. My guilty pleasure clearly here is Starbucks, okay? So Starbucks, I created a rule for Starbucks, which is that it goes into meals and entertainment, because that's what it is, okay? You can edit the rule, which we talked about, but this would be one that I could go ahead and add that in, and it would just add all these in, okay? Now, this substitution check for 1,500 thinks it's supposed to be an Ask My Accountant. This is not right. So you wouldn't want to add that, because QuickBooks is trying to tell me what it is, and that's not what it is. And then you have, like, again, here's another one where it's trying to tell me what it is, and it's a check. It's not Ask My Accountant, okay? So QuickBooks thinks it's smarter than us, but it isn't always smarter than us. But it does get better based on the transactions that you spend, okay? Then you get, let's see here if we can do, here's like Wendy's, meals and entertainment. This is not a rule, but it is correct. So you can hit add here, and it'll disappear out of your transactions. And then if you click, like I'll click it for us. And then if I click another one that's the same thing, now it wants to do this automatically for me. So anytime I go to this Wendy's on Manchester Road, it will automatically categorize it to meals and entertainment. And then Steve, for what you ask about how will it go in, or will you always have to categorize it, you can tell it to auto add. So meaning you don't ever have to look at it ever again. Anytime you go to this Wendy's, it will automatically put it into your bank account ledger, and it will show up on your reconciliation report, or you can review it each time. I don't like to do auto add, and the reason for that is I like to see what's coming through my bank account to make sure there's no identity theft. Like if somebody else bought Wendy's with your card, you maybe wouldn't catch it right away. Or if a vendor charges you twice and it automatically just goes in, you might not catch it right away. So it's a security thing for me, as much as I watch money and other people's money, that I want to see it. But I have no preference. If you want to do auto ads and you feel totally confident that you're not going to have any issues, feel free to do that. And then you can create the rule and it'll automatically do it for you. Okay. I'm not going to create a rule right now, but I wanted to show you what it looked like. So that's how you do syncing the bank account and then manually downloading the data. Now you're still going to have sometimes where the data doesn't match. Okay. So it's not perfect. You're still missing a couple charges. No big deal. All we would do from here is go into our bank register. So if you scroll down a little bit on the screen, on the right here, it says go to bank register. And then this is my bank register. So where it says add deposit, I can click on it and say I want to do an expense. And I'm going to say it's Wendy's again, just to make my life easier. And then say I spent $5 at Wendy's. And then this is still meals and entertainment. And say this is dated back to the 5th of August, and I can hit save. So now it's down here where I just entered it and it's in the bank account again. So if it disregards bank fees, or you have multiple cards and you're missing a couple transactions, you can do it this way. You can also manually download, like we did the step before this, to the credit card. You will just then have duplicate transactions because it's going to download everything on the statement, not just the ones on that individual card. And you want to make sure that you don't enter both. And when you reconcile, you'll obviously only click on the ones that were downloaded and categorized properly, and then you can exclude the others. So if we go back over here to banking, you have 3 categories: reviewed, categorized, or excluded. So if I go over here to this one, okay, if I look at categorized, my 2 transactions that I categorized are here, okay, and I can undo them if I think they're wrong or they need edited. And if I went in and I entered another Wendy's transaction, you can exclude it. So if I go here and say, well, this one is a duplicate, so I'm going to hit exclude. Now I've got it in the exclude. And again, if you go into your bank rec and realize that it was something you actually needed, then you can undo it as well, and it will pop back over to the other side. So you're not deleting, you're basically moving it. If you delete it from the bank account, it's going to the exclude bucket. If it's something that you've had synced or you've downloaded into. If you're manually entering it and you delete it, it's deleted, it's gone. It's not going to show anywhere else again because you manually entered that and you're manually deleting it. So keep in mind when you're paying attention to what you're doing, that if you're moving stuff around, there's going to be there's different areas of security for what you're trying to do with it. Okay. Do we have any questions about downloading or manually importing or doing the manual entry into QuickBooks?
Nothing at this time.
Okay, perfect. So then let's do, I'm going to switch us over here to a different client. And I'm going to do this because they've got the best vendors to look at for our vendors. And they also have a ton of match transactions. So let's look at banking first. And then let's look at some of their matching. Okay, so if you use QuickBooks Online to enter bills and you write checks and you print them on your printer, or you write checks and handwrite them, but you're tracking them inside of QuickBooks, you will have duplicate entries if you do not match the transaction as it comes through. So, for example, I wrote a check last week for a specific vendor for $400, okay, $449. When that check clears this week, when they actually take it to the bank, put it in, and it clears my bank account, it should match with the check number I entered into QuickBooks and the dollar amount to what clears my bank account, okay? So that I'm not putting another one in when it comes through my bank account. So what that means is that if you have you have multiple things that have this exact dollar amount. So if you click on it, it says that it can be your bill payment that you sent out. It can also be a balance that you have open in a bill. So this cleared on 9/29. So I bet that this, based on the date, goes with my bill payment from 9/10. And now I can hit match, and it's going to get entered into my QuickBooks and come out of there. Okay. Same goes for here. They have 2 bill payments. This one was for of Powell County, but it recognized that this check number matched this check number, but it had $2 amounts in QuickBooks bills somewhere to show that it wanted to give you the option to correct it if it was wrong. So this is correct check number, that friend, and that goes with this one. So I'm going to hit match on this one. And then we have this one here, which is they pay a vendor more than once. And so this one is trying to match with the wrong one based on the date. So this was cleared in 10/5. Bill is not till 10/12. This check number matches this bill check number down here. So I'm going to change it, and the dollar amount is the same. So I'm going to go ahead and click match. If there are not more than one, meaning there's only $1 amount and one vendor, you're not going to get the pop-up. You can just hit match. So I do still spot check everything. So for example, this says Friends of Powell County and this says Lawrence County Shelter. I'm going to have to check this. Who it says and who the bill is, just because the dollar amount matches doesn't mean that it matches, okay? But this one, VetRad and VetRad, for the same amount, same check number, that matches. So I'm going to go ahead and hit match on that one. And then Phillips Food, dollar amount matches, check number matches. So that one's good. Okay. So QuickBooks Online, as you see, has really good moments, and then it has where it's kind of off the rocker moments. And it's just because the algorithm is learning the way you do accounting so that it knows exactly what to do. And as you enter stuff through down here, then your little numbers up here are different. This number gets smaller every time I add a transaction, okay? So now that we've entered some of those, and obviously there's a bunch of them here that need matched, okay, for them, because they cut 90% checks. So a lot of the stuff coming through the bank account that's not a deposit is going to be from here. You can sit and just click and click and click and click, obviously as you're spot checking as you go. But let's look at some vendors. So if you click on expenses, it takes me into what it is, the number that it would be on it. We track everything by invoice number, the payee, the category it might be, if there's memos, pending what we're doing, and then the totals, okay? If I click on vendors over here, it's going to take me here where I have so many bills, so many open bills, so many overdue bills, and I have the ability to have a new vendor or import vendors. So I'm going to do a new vendor, and we're going to do okay. And then this can be, you fill it all out. Okay. I don't have an email address or anything like that, so I'm going to go ahead and hit save. Now it's entered my vendor that I wanted, so now I can search him. Actually, this wants to search bills. Let's click here. Let me click on a vendor. This brings me up my vendor list here. So now I should be able to search it. Sometimes it gets touchy. If I had a bill for that vendor, I could have searched him on the screen before this. I don't have a bill for this vendor because I just created it. So he's here. And then you can see his information. If he had transactions, so like for example, Walgreens, here's all their transactions that they have based on a time frame that you pick. And then you can edit it here, make any changes. You can make him inactive. If you're not going to, if it's a vendor you don't use anymore, or they changed names or transferred ownership and changed, whatever it might be. So you can do that from inside of here. If you do billing rates, that type of thing. I'm going to make this inactive because obviously this is not one that we use because it was one I made up. Okay. And then he is now inactive. They cannot do anything with him. And then I can make him active again right here. If I needed, like, let's see here, we'll do this one, a chamber. If I needed to see the bill, there it goes. You can see that I can click on that expense and it brings up where it is, where it cleared, what the deal is, what we're doing, those types of things. Okay. Okay. All of it's clickable inside of here. Same with this one. You know, you can do it. And if you needed to make any edits, you needed to change the category it was in, the check number came through wrong. Maybe you fed it through the printer and it got a different check number than you thought it would in QuickBooks. So you want to pay attention to what we're doing with that as well. And then if you go back into expenses again, this is going to be where the 1099s are, but you can also pay bills and do materials through here, but it's probably not going to let me do our 1099s because it's not time yet. But it confirms your information, the next person's information. You know, it's a wizard for you, for your vendors, to make sure you do that. So that's how you add a vendor, edit a vendor, and make a vendor inactive if you needed to. A lot of times if you just add vendors and then you never go back to use them again, most people don't go back through and actually clean up the vendors, meaning you don't go back and go, oh, well, this is inactive, until you're switching. So like you're going from desktop to online and you don't have that many that you can list out, or you know, somebody comes in and wants to do a cleanup. I mean, I don't ever go back to my vendors and do it. I clean up my customers all the time, because if you're not a customer anymore, I don't want to advertise to you or you know, do those types of things. But I don't ever go through my vendors. But a lot of people want to keep it updated, or as you're in a niche market, you work with the same 5 or 6 people over and over and over again. So your list is not very long. You don't have a whole lot to do. Okay. So that's kind of how you get into that. And then we'll click back over here to our other client. And then we'll go back into banking. So I linked in the credit card and the bank account to show you guys how to do it. And each bank or vendor that you have those provided through, so Chase, Huntington, Citizens, CitiCard, Bank of America, the list goes on, okay, is different. The wizard's a little bit different. They require different steps, but you can see how it looks when you go to log into it, that you look like you're logging into the actual portal for that organization. Same with downloading. When you log in, the download button is in different spots. You know, it just kind of depends on what you're doing. If you want to ever detach it, if I click edit sign in information, I don't want to, let's see if I can get it.
And I'll ask a question while you're going through that. I have several bank transactions up for review, but have reconciled the accounts.
Okay. So if you have transactions that are up for review, but you've reconciled the account, first thing you do is check the date. Are they outside of the date of the reconciliation? Okay. Or they're duplicates. And so then it's determining which ones do you keep and which ones do you get rid of. So if the date is after your statement date, you can categorize those because they would go into the next statement, right? And then that would get them out of the for review. Odds are every day you'll have something in the for review, okay? If they are within the dates range that you are doing on the bank statement, then more than likely, if your reconciliation absolutely matched, either you had to do manual entry or QuickBooks duplicated them, and you can exclude those out of there so that they get out of the for review bucket because they're duplicates. And you don't need, you've already taken the deduction from the bank statement and you obviously don't need it again. So you want to exclude it out. And it does happen when you're downloading and allowing it to import. If it's importing on its own, odds are the only way you'd have a duplicate is if something didn't match, like you marked an invoice paid, took it to the bank, made the deposit. When it came through on the bank feed, you didn't match it to the invoice that you had paid. Therefore, that would be a duplicate. You'd have 2 deposits. And it's really important that you get those to match. Otherwise, your invoices aren't going to be marked paid, or you'll have undeposited funds because you marked it paid, but then didn't put the money anywhere. and you'll have just an additional deposit, which would make you more profitable than you are. Steve, does that help?
I haven't seen anything fall. Yes, she said. So thank you.
Okay, no, not a problem. Okay, so then if you go here and you click your little guy, you can edit your account information. And then this is where you can change it if it's not a credit card or it came in wrong. I want to disconnect account that is saved, and then I'll hit save and close. And so now that account is no longer here. So as you guys grow, or say something happened, an employee quit and they had a company credit card, you got to close that credit card down and reopen another one because they were disgruntled and didn't give you your card back and you don't want to play that game right. You're going to have to unsync it once you've done your last bank account reconciliation and then resync the new one. And I'll do the same thing over here because we aren't going to keep these on here. Okay. Now, if you go down over here to chart of accounts, the account isn't gone. It's just not syncing anymore. So the 3 transactions I still put in are still here. So I would edit and delete it because these are training transactions, not her transactions. So, and then I'll make that account inactive, which will really get it out. So there's a couple avenues that you have to do to totally disconnect the account and get the information out. And that's it. So.
And can you add a vendor name after you did a bank reconciliation without messing up the bank reconciliation?
Yes, absolutely. If you go into your register here, and let me find one, see if I can find one that has it. Here's one. This says ask. This is her rent. And so I can change all of this. Hit save. And it says this transaction was downloaded from your bank account. Are you sure you want to edit it? Yes. And then you're editing something that has been reconciled. Is that okay? Yes. And it doesn't change anything. See, the transaction's still here, still same check number. All you did was change the classification and leave the payment in here. It does warn you that you're changing something that was reconciled so that you know that if you were something that was reconciled, which obviously would ruin the reconciliation, that you're doing the adjustment. But when you're just changing a name or changing a classification, you're not hurting it in any way, shape, or form. Okay, now that's everything I had planned to cover today with all of this, obviously with the bank matching being super easy, vendors being something that's, you guys are already doing as you're using the QuickBooks, and then syncing and doing the manual entry. I leave a lot of room for questions because this is probably the most uncertain area of QuickBooks Online because people are terrified to have duplicate data. They're terrified to make a mistake. They're afraid to mess up a reconciliation. I think I saw that Jen's on the call. We just moved her from desktop to online. And so, she was watching me spot check, making sure the data came through okay, those types of things. If you think you've messed it up, it's okay. There's always a way to fix it. Okay. And QuickBooks Online, because it bookmarks everything we're doing with that feature I told you that's tracking on who made the transaction and what changed it and what the edit was, that's how you know. So because we had a question about reconciliation, we'll talk about reconciliation next week, but I am going to mess up a reconciliation for a second to show you what it does. So let me find.
Okay, while you're messing that up, I'm planning on uploading my desktop into the online version. How hard will this be for me? I'm scared we will have issues.
So I usually budget that it takes about 2 hours, pending the size of your file. They've come a long way. And actually, it will allow you to do it from inside your desktop version. And so it's not going to be super hard. I think Jen and I had it done last week in about 45 minutes. So it's, I'd be happy to walk you through it with you just to be there to support. It really depends on your device, your file size, and your security settings. Those are the 3 hurdles that make it a little bit more challenging to get up there. Sometimes you have to remove the security settings, but it is really simple to do. I want to find an actual, here we go. So here's one. So I'm going to undo this. It says you've already reconciled this transaction you're selecting. I'm going to hit continue anyways. Okay. So it tried to warn me that I was messing up my reconciliation. So this is what I was talking about with, it gives you plenty of warning that you're changing something that's going to mess it up. So when somebody calls and says my bank rec's off, well, yeah, somebody got warned that it was going to be off. Okay. So now I'll go into my register here and I'm going to go into Reconcile. And this is the second spot that QuickBooks Online is really good at, where it tells me your beginning balance is off. And then it says, we can fix this. So it's going to tell me the 2 things I deleted. This is the one I just deleted with you guys. This is one that I probably deleted, who knows when, but I'll find out because it's going to show me the history. So it says that on the 13th, I deleted it. And on the 27th, I had added it. Okay, so it gives me my history audit that I need to see. And then if I go back into, I'm missing a button here. Okay, so then if I go back to this here, okay, I can click on it and click done. And now I know what was off, so I know what to go find on my bank statement in order for me to fix it. So this is really helpful with that. And that's why I said, you know, not only do you get warned before you're going to mess something up, but now you know exactly what the 2 transactions are and you can go in and find them. And now, because I deleted something that was downloaded, if I go back over here to banking, it should be here. Here's the one I deleted. Okay, and since it was downloaded, it popped back over here. So if I click add, this is going to go in there. And then ironically, this is the other one that was in that list. And I can click match. And now my bank balance here matches here. And I bet if I go back to my reconciliation, I think it fixed all of this. We can hit done here. It should be this. I think it didn't just update because I just clicked all that, but this will be fixed and you won't have this issue anymore because those were the 2 transactions we had sitting out. Okay. If you're manually entering it and manually deleting it, then you may have to manually enter it again. This tool will still tell you exactly what you deleted, so you know what transaction to go back through your reconciliation report and find, or your bank statement and find, and you know exactly what you're looking for. Do we have any other questions today, guys?
Nothing in the chat room at this moment.
Okay, so for next week, we're going to talk about how to reconcile. So we're going to go more in detail with what we were just kind of looking at. We'll fix, I'm going to mess up some reconciliations. We're going to fix them. I'm going to show you the reports you get with the reconciliations when you do it, why it's important to print those, specifically for me. So if there's more of you with boards and stuff like that, where people want to look at the stuff, it's really important to do that. It's also going to show you things that are still outstanding in your bank account. So, you know, we had that question about what if it's still there and never cleared? You know, what do we do about that? And then we're going to talk about entering bills and paying bills, which then is going to loop back into us matching the stuff like we did this week. And then we're going to create invoices. We're going to customize some invoice stuff. We're going to continue matching the transactions. This is more going to be with our income now because we're going to mark invoices paid. And then we're going to obviously match the transaction with the deposit that hits the bank account. And then we're also going to go how to edit and create items. So into the invoices, the things you're selling, the services, the inventory, those types of things, how you edit them, and how do we map them? Where do they go? What kind of income buckets do we want? Those types of things. So next week is going to be a little bit jumped around, lots of screens, lots of images. The PowerPoint will be rather large to make sure that you guys have all of the stuff that you need to keep reviewing that stuff. And then invoicing itself will probably take about 30 to 40 minutes just on the invoicing piece. So be prepared for that. If you guys do invoicing through QuickBooks, or even if you're using another software to do invoicing right now, you might find some areas of improvement over there, or maybe even switch it over to QuickBooks. The hardest thing is invoicing in multiple places, keeping it all straight inside of QuickBooks to make sure you've captured it all, but you also don't want any duplicate either.
And we do have 2 more questions. A subcontractor on a 1099 should be categorized as a payroll expense, and then they wrote over $600.
Yes, over $600, it can go in a payroll expense. I would create a sub-account of payroll that says subcontractor. Because as a self-employed person, most of the time we do use subcontractors, so that is our payroll. You could have it stand on its own 2 feet if you want it to, but I always loop mine underneath payroll expenses as a sub-account.
Okay. A sole proprietor or single member LLC, the draw should be on the balance sheet and used for personal income taxes, correct?
Yes, correct. And just so you know, guys, if you don't pay somebody $600, you can still take the deduction. You're just not issuing them anything at the end of the year. So don't think you have to pay them $600 for you to get the expense as a business owner. No, it's just if they make more than that, they have to claim the income themselves that you're giving them.
Okay, I don't see any other questions. Good information, Ann.
I hope I didn't go too fast today. I know with QuickBooks Online, because it's so easy to navigate with the wizards, sometimes I speed up. So
after going through 2 weeks of online, I hope they never get rid of desktop for us dinosaurs out there. Another question popped up. Regarding cost of goods sold for a website designer, should they use cost of goods sold as an expense or general expense?
I would say use it as an expense. As a web designer, you're paying for plugins. You're going to pay for keyword research. You're probably paying for content creation for the website. You're probably even paying for like lead pages or landing pages, stuff like that. Those would be your cost of goods sold based on your industry. And that can be confusing because, again, some of those probably play into dues and subscriptions as well. But your clients pay you a flat fee for you to be able to purchase those and build their portal. So yours, because of it, you're going to have a lot of those that will be more in the cost of good. And I would say even graphic designers would be cost of goods for you. And that would be something, content and graphic designers, based on that, maybe something you want to track individually, not just as a subcontractor, because those are subcontractors you're paying. But you might want to see those as you know how much you spent on graphic design this year and how much you spent on content this year.
And I would say the key to that is really being consistent. So if you marked it one way over the years, make sure you're consistent so that you can monitor your performance if you ever want to by industry standards and 2 by trends. So, in order to see if you're doing better or worse than prior years, you'd want to be consistent on how you mark those expenses. So use as cost of goods sold or a general expense. I think the answer was cost of goods sold, if I heard you correct.
Yes, I would use it as a cost of goods sold.
Yeah. Okay, we'll give it another minute and see if anybody else pops up. They have improved online. I remember when it first rolled out, there were all kind of challenges, especially with the downloading of information from the bank, duplications and.
Yep. And now it seems like we've got it narrowed down to like if you manually import, there's duplications, and then the income is the hardest one. But if you understand how to navigate it, you really eliminate a lot of that. But that would be the only areas. The income is probably the hardest area right now.
This question comes up a lot, so I'll be anxious for your response. But can you change a category once 2019 is closed? And I assume they mean close the account, QuickBooks.
Yes, you can. You just want to be very careful if you've already filed your tax return, because accountants work really hard to make sure that your financials inside of QuickBooks match your tax return for banking purposes. And so if you go changing categories around for backdated data that's already on a tax return, you're going to fluff all that up. And so it would be easier if, unless you have not filed taxes, you only change it moving forward, but not backwards. But you can do it. You won't mess up your reconciliation. It's just a matter of making sure it still matches your tax return.
And do you have a preference on the timing of changing from desktop to online? Do you want to match it up with year end? Do you want to get the first couple months of the new year in, or doesn't it matter?
I tell people to do it right after they've done a bank reconciliation, so that you know that the date you're starting to do the import is the date of the new statement, the starting date. So just any creasing mark for that. For a lot of us, it's, month to month we get invoices. Sometimes it floats like day 3 or 4 into the month. But I do make sure that you try to end it on a bank statement or a credit card statement cycle, so that you know exactly what to import to eliminate the duplicate data. There is really no good time to do the invoice change and stuff like that. But it really just comes down to making sure you minimize the work. It used to undo the reconciliations when you imported from desktop to online. I found with doing Jen's this past week, they've actually fixed that, and it didn't undo her reconciliations, which is great. That makes it even easier to catch any errors or duplicate data.
Okay. Well, that looks maybe like, oh, wait, my bookkeeper is saying she doesn't want to have things import from my bank. She wants to opt for doing it by hand. Should she have worries?
Steve, this kind of goes into what you said about like you hope they never get rid of desktop.
Yeah.
It's a trust thing. It's a security thing. People get nervous. If you pay her a flat fee, I wouldn't be too concerned about it. If you pay her hourly, QuickBooks Online is not necessarily user-friendly or efficient to manually enter the information. So I would say be cautious of time that she's going to spend on it, because that costs you money and takes away from efficiency. Because a lot of the reason you do QuickBooks Online is to be able to import the data or sync it. That's the whole appeal to it, is that it's on the go and it's quicker and easier and simplistic. So I would be concerned about that. But there's nothing wrong with it. It just isn't seamless. Like when you're on desktop, I can hit the tab key, type tab key number, tab key, and then classify it, enter, and then I can keep going like that. Where QuickBooks Online, you saw I have to click on it, I have to type the information, I got to hit save, then I got to go back, I got to click on it again. There's no tabbing, there's no enter, it's all clicking in the mouse, and so it's very slow, and to me, kind of archaic in that area when it comes to manually entering.
That brings up a question and directed at the last question we got, and I suppose to you and companies like yours. What do you recommend from an owner standpoint to control and understand? Because you certainly, as a bookkeeping company and accounting services, have access to lots of cash and bank accounts. What do you recommend from an owner's perspective if they are doing online? That do they look at the bank reconciliation monthly? Do they look at their cash balances? What do you recommend?
So this is an area that people get really nervous about. So this is my best example, and I'll just be totally honest with you. When you're a business owner and you approach a bookkeeper or you approach an accounting firm, you are basically getting absolutely naked in front of them, because the only way we can do our job is to see every moving piece you have going on. This is, I got to see your cash. I got to see where it's going. I know your habits. I know where you like to spend money. You know, I know, I know everything about you, right? And you know very little about us. And this is where people get nervous. People can steal your identity. They can steal money from you. It happens. I've seen it. I've caught it. It's really sad that there are people like that in this world. But I really encourage my business owners to be very adamant about looking at it once a month with me. I want you to look at it once a month. I want to compare it to the previous year if we've got that data. If we go over budget or we're under budget or a number seems funky to you, let's talk about it. Let's dig it out. Let's go. I tell my business owners I want an hour. All I ask to look at your financials and answer any questions I have. Okay. Because sometimes I don't know what an expense is pending your industry. Like, I'm not super savvy in campgrounds. I've come a long way with who I work with in the campground world, but I still don't know every vendor she uses. I can make some assumptions and I can Google all day long, but Columbus gas to me is a utility, but actually it might be propane. And so you have to really know the difference in what you're doing in order to do that. And that's where the owner needs to step in with the accountants and bookkeepers and say, hey, I know that this is a professional fee, but I actually paid him to do coaching and I want to see a coaching category. So can we flip this to coaching? Because I want to track how much I'm spending on coaching versus what my coach is making me. And you as the owner have to determine that. And there's going to be questions about certain things, or if you're putting money in, I don't want to mistake it for income. As a bookkeeper or an accountant, you got to tell me that. So I tell clients, email me everything. If you're moving money back and forth, you're using personal accounts, which we obviously don't encourage, but it happens. Okay. Email me what you're doing so that I know what it is. If you're spending over a certain amount of money, ask me to make sure we have the money, because as the accountant, I budget payroll for the next 2 weeks and the bills due in the next 2 weeks, where you see cash in the bank and think, let's go most of the time. Okay. And then I also make sure that we talk about the finances once a month. And it comes down to you looking at our utilities were up, our utilities were down, our payroll was up, our payroll was down, our this was up, our this was down, right? And it really triggers, catching any fraud, theft, people that are squishing the time out to milk the hours. That stuff happens, especially with all the things going on right now. And I think you guys will start to see it more as Christmas is coming. We're not far from the holidays. But if you give your accountant an hour a month and you spend a little time before that, half hour or so, to look at the stuff once a month, and the person you're doing it is somebody you trust, you should have no problem. And as soon as there's an issue or something that they can't justify and isn't right in your eyes, because you're still the one swiping the card and spending the money, it's time to have the conversation. The one we never like to have, the tough one. What is this? Why did this happen? Who did this? It's not you're blaming the accountant. It's we need to question this transaction because this isn't something I did. This isn't something you did. Where did this come from? And you catch it. I had identity theft. They opened like 6 accounts in my name. It was a huge debacle, froze all my business stuff. I had to really dive in to figure out what was mine, what was my husband's, and what was this, fake person. And so, you're the only one that knows that. But if you wait multiple months to look back at that, there can be a lot of issues where you can't remember what you spent money on 6 months ago. Half the time as business owners, you don't remember what you did last month, but it is fresher than waiting 6 months.
Good stuff, Ann. Thank you.
Mm-hmm.
I think that's the extent of the questions. So we'll just plan on reconvening for part 3 of the 3-part beginner session next Tuesday at 10 o'clock.
Perfect. Sounds good, guys. And if you have any questions, I can drop my email here again to make sure that you guys have it. Let's see here. Get my little chat box here. Feel free to reach out. Steve Schilling's got my information too.
Okay, well, we'll leave that up and And I've been meaning to ask, how do you use the sample ones that you use? Do you get permission from the businesses?
Some of them I have permission from to use because they're small and they're not too, you can't see account numbers or anything like that. And then I just use a lot of my stuff right now.
Gotcha.
The sample wizards are great, but they only get you so far. Like I can't actually integrate bank accounts and do stuff like that. So I'm just going to use a lot of my stuff because, it's me and I'm the one teaching. So it's just easier for security. The ones on the PowerPoint for diversity, I can black out company names and stuff. So I can use a lot more diverse inside the PowerPoints without disclosing anybody's information.
Gotcha. Okay. Okay. Well, I think I'll sign off and see you Thursday at 10.
Sounds good. You guys have a great day.
Okay, you too. Thanks.
Bye.
Bye.